today we're looking at study unit 5 and 6. That's the focus. We're building on the basics. We've covered 1, 2, 3, and 4. I asked you to go through all the activities and to find different account names, and you had to identify what they are. So when going through the recap, I'm going to ask you for those responses that you did. Okay, we need to obviously identify what an asset is, and we need to know what a liability is. How do I know what an asset is? Well, the definition is important. An asset is a resource that's controlled by the entity that arises from a past event that will lead to future economic benefits. Some of the assets we spoke about: vehicles, land and buildings. What are some of the others that you could get? What other ones did you find? I'm looking at study unit 5 and 6. It's in the notes. Did you not get this? Okay, yeah, we're looking at the notes, slides. Okay, yeah, the textbook you can read in your own time. It's the note that we need to focus on because the notes cover the most important bits and pieces. Okay, so I'm asking for other assets. What else do we get? Vehicles, land and buildings. What else do we get? There's lots of different assets. Pardon? Equipment, good. What else? Cash, bank, other assets. What else? So there's a lot, so why can't you give me more? Okay, if I buy something to sell, what do I call that? I call that inventory. Do you agree? Inventory is the items that I'm buying to sell. So an asset is a resource that we have that's going to give us future economic benefit. The rule is important. So you guys need to know where the asset increases. You have to. Okay. Why? Because the asset will increase on this side, meaning if I buy more equipment, am I going to debit or credit the equipment? Debit the equipment, because what are we looking at? An asset. And if I'm buying equipment, what's happening to it? It's increasing. Does that make sense? Okay, see, that's how you approach questions. You need to know what the actual account is, and you need to know what's happening to the account. Okay, so we'll look at steps later. Right now, I'm just identifying rules and debits and credits. So the rule for an asset is a resource controlled by the entity arising from a past event. The increase is on the debit side, and the decrease is on the credit side. Okay, that's what we're focusing on. Okay, so when focusing on an asset, different accounts will meet the definition. So if I'm looking at equipment, is equipment an asset? Yes, because it meets that definition. Is a vehicle an asset? Yes, it meets that definition. So any asset, doesn't matter what it is, will follow the same rule. Questions?
When does a vehicle become a liability?
A vehicle will never be a liability.
Because of, so if you look at it, with a vehicle, you're taking out money to go and repair it, you're spending for it.
Okay, a vehicle will never be a liability because a vehicle creates economic benefit. The liability on the vehicle is a separate account altogether. So if I take out a loan to buy the vehicle, then I've got two accounts. I've got the loan and I've got the vehicle. Do you agree? You can't change what something is. The nature of accounting is very specific because rules are rules. You can't break the rules. Sales are income. You can't classify a sale as an expense because now you're not following the rules, and then you're creative accounting. That's bad because now we're speaking different languages. Okay, accounting is very specific. Last week or week before we spoke about accounting as being a language for communicating information. Okay, so if I'm talking about an asset, I'm talking about a resource that's controlled that leads to future economic benefit. A vehicle will always be considered an asset. But the vehicle could have been bought using a liability, or the vehicle could have been bought using an asset. If I use cash to buy a vehicle, I'm using an asset to buy another asset. Okay, so be careful. Today we're going to look at that. Okay, we're going to look at analysis. Right, so from this week, what I need you guys to be able to do is interpret transactions. So if someone describes something to you, can you identify the accounts that are being affected? That's the key. Okay, because you're not going to be given the accounts. You'll be given a statement. Okay, the business did this. And from that information, you need to tell me, well, what accounts am I going to debit, what accounts am I going to credit? See, that's the challenge. Okay, so after these two sets of notes, 5 and 6, you should be able to do that, or at least you should have a better idea of how to do it. Okay, so when we go to other questions, we can practice. Okay, liabilities, definition, obligation. That's the key word. Okay, so is a loan a liability? Yes, because the loan meets the definition of an obligation. If I have an obligation to pay, it's a liability, not an asset. A liability will always be a liability. A liability will never be anything else. What other liabilities did you guys find?
Liabilities, not loan. You mentioned loan, right?
Salary isn't a liability. Okay, how is a salary an obligation?
Because
Because of you are in an agreement with someone that you are going to pay me a certain
Okay, you're talking about the contract that you've signed.
But it is because in a nutshell, at the end of the month, you have to pay it. You're right to pay it.
no, but
Well, from a legal point of view, okay, if you've employed someone, okay, you'd be obliged to pay them for their services. But if that individual doesn't work, are you still entitled to pay them? Or are you still obliged to pay them? Probably not. Okay, then that might go to court. You might fight over that. Okay, if someone doesn't work, but they're signed or contracted to your company, are you still obliged to pay them? Well, there's a question mark. The company is probably not going to want to pay. The employee is going to want to get paid. Do you agree? And that's where those things go to court and the dispute needs to be
So basically,
sorted
that
out.
a salary is not a
A salary, when talking about accounting rules and definitions, a salary isn't an obligation. If I have salaries and wages that haven't been paid, now we're talking about a liability, because now I have salaries and wages that haven't been paid. Okay, and we call that something different. So if you have gone further, you would have covered something called an accrued expense. Okay? An accrued expense is a liability. Now we're talking about salaries that haven't been paid, that must be paid. See, now it's different. Okay, so salaries that, so for example, if I've employed someone for the month, and that individual has worked for the month, and I haven't paid them, do I have a liability? Yes, because I have outstanding salaries and wages that haven't been paid. Right, is the employee entitled to that salary and wage? Yes. Okay, then that's an accrued expense. See, that's something different. Okay, so one step at a time, we'll get to salaries and wages. Those are adjustments. Right now, we need to identify things that meet the definition. Okay, and definitions are very specific. So think about it, salaries and wages. Is it an obligation to the business? No, because businesses pay them. And if businesses pay them, they're actually expenses. There's the next two. Income and expenses. Right, so if I have salaries and wages from an accounting point of view meets the definition of a decrease in economic benefit, meaning I'm paying someone something. Okay, what other expenses did you guys find? Stationery, good. Stationery is an expense because stationery is an outflow of benefit. When you use the pen, you lose it. When you use the paper, you lose it. Okay, so there's a decrease in benefit. Okay, good example. What differentiates an asset from an expense? Well, think about a printer. Is the printer the asset or the expense? The printer's the asset, correct. Okay, why? Because you're still going to have the printer after you've printed something. Will you still have the paper and the ink? No, you won't. So the paper and ink used in the printer is seen as an expense. because there's a decrease or an outflow of benefits. Okay, as you use paper, it's gone. As you use ink, it's gone. Right, there's no future benefits. Okay, so that's the difference between an asset and an expense. Same thing with a vehicle. A vehicle is an asset. The fuel or the petrol that's put into the vehicle is an expense, because as you travel, you're going to lose the fuel, the petrol. Okay, it's going to be burnt up. Makes sense? Okay, so definitions are important. You need to know what they are. Income, increase in benefits. Different examples, sales is one. What else? Let's think law. What income do law practitioners get? Yeah, but what income? Do you buy and sell goods? No, you render a service. You give advice. You represent your client. Okay, so that's a fee. Okay, so fee income or services rendered would be more associated with law practitioners. Okay, people that are offering a service rather than offering a product. Okay, if you are buying and selling textbooks, then you're going to have sales and cost of sales. Okay, so those are two definitions. Again, rules are important. Income increases on the credits. Expenses increase on the debits. Last two, capital and drawings. We spoke about them last week. They're very important. Capital is capital. Capital starts with a C. Credit starts with a C. Drawing starts with a D. Debit starts with a D. Okay, so those are easy to remember where the pluses are. Okay, so if I contribute something to the business, what is that going to be viewed as? Capital. It can't be viewed as anything else. Right, you've got capital because it's a contribution. Drawings is drawings. Drawings means we've taken from the business. It's always for personal use though. Okay, the owner is the person taking. Right, so now we're going to look at double entry. So 2 weeks ago, okay, before the public holiday, we spoke about the importance of knowing what things are. Okay, so you need to know what things are before you can apply the double entry system. Okay, if you don't know what things are, then that's a problem. Okay, because then the first step is missing. Okay, you need to have good basics in order to do more advanced. It doesn't matter what I'm doing, just a note about that. It can be accounting equation, which is your first application that they talk about in your textbook and your study guide. It can be a journal, it can be a ledger, it can be a trial balance, it can be anything, financial statements even. You are always going to have to interpret and analyze transactions. How do you interpret and analyze? You need to identify what's happening in the transaction. Is it cash or is it credit? And I need to know what is the accounting element or what is the accounting effect. Okay, in other words, what's actually happening? Okay, meaning, am I increasing or decreasing the account? Okay, that's the understanding, that's the interpretation. Okay, and we'll see that just now when we do some examples. Just to give you one, we spoke about the vehicle. If I buy a vehicle, we know a vehicle is an asset, right? So if I'm buying a vehicle and I know it's an asset, what's happening to the asset? It's increasing. So would I debit or credit that account? See, I would debit the account for vehicles because I know vehicles is an asset. And I know assets increase on the debit. See, that's why those rules are so important. Okay, and that's the approach. So I'm not going to ask you to study huge amounts of information. Okay, that's one way of doing it. It does work, but it just takes a lot more time and effort. And if you forget something, then you get things wrong. Okay, or if the examiner gives you something different, then you get things wrong, because now I can't remember seeing that. Okay, so this approach always works. And it's the most easiest and simplest way to approach accounting if you're not going to study it further. Okay, even if you study it further, I'm still going to say the same thing. Right, because you can't change the basics. You can't change the principles. Okay, things are what they are. Okay, so assets are assets. Liabilities are liabilities. We can't change what they are. But we can do different things with them. Okay, so I can buy an asset, but I can also sell an asset. I can take out a loan. I can also pay back a loan. They're two different transactions. Does that make sense? Okay, so that's what we're going to be doing. We're going to be applying the double entry rule, which is every debit must have a credit. What does the debit mean? We spoke about it last time. If someone asks you what is a debit, what do you say?
Debit is
No, it's not.
Isn't it the debit in accounting it will increase? It means it's like
Not always. A debit isn't always an increase. A debit would be an increase for an asset, but a decrease for liability. Because you have the 6 rules. Come, you're overthinking it. A debit is the left-hand side of an account. That's all. Remember that? We said a debit is the left, the credit is the right. That's it. Okay, accountants use that to refer to the different sides of the accounts. They don't talk about lefts and rights. Can you imagine how silly that would sound? Okay, put this on the left, put that on the right. Okay, it doesn't sound accounting. Okay, it sounds more accounting by talking about debits and credits. Okay, and that's it. That's what it means. Okay, a debit is just the left of an account. The credit is the right of an account. It could represent an increase for certain accounts. It could represent a decrease for certain accounts. It depends what account you're dealing with. See, that's the big question mark. Do you know what account you've got? If you know what account you've got, then you'll know how to approach it. Does that make sense? Okay. So let's practice. In the textbook, they've given you different examples, and they've given you debits and credits and all of that. Okay, these are examples to practice the application. Okay, so I don't want you to just study this. That's what I don't want you to do. I want you to understand how to get there. Okay, because that's more important. Right, if you want, you can just study what they tell you in the textbook. When you have a capital contribution, you must credit the capital. See, that's one way of studying accounting. That's using your memory. Okay, then you need a massive memory because there's a lot of transactions. Okay. What I'm going to do is I'm going to remember those 6 rules. Remember those 6 rules, that page you had last week? Okay, don't put that page away. Keep that page nearby. Okay, because obviously you're not going to know those rules off by heart. Do you agree? Okay, so keep that page in front of you so you've got all 6 rules in front of you. Okay, then I'm going to show you how to use the rules. Okay, so now I know what I need to do. I need to understand why do I do that. Okay, that's the key. Right, the first one is easy because capital is capital. Okay, so when I look at the transaction, see, this is what you'll be given. So you'll be given this in your assignment, you'll be given this in your exam, you'll be given a transaction. Okay, so they've described it. They've said the owner gives 1 million to the business. You need to identify keywords that stand out. What stands out? Owner gives. What else? To the business. I wouldn't say that stands out.
But then we can see the figure.
Yes, the figure stands out. Okay, so what did the owner give? He gave cash. The owner gave money to the business. Okay, whose perspective do we look at? The business or the owner? The business. Okay, because remember you're accounting for the business's transactions. Okay, so from the perspective of the business, what's going to happen to the business's bank account? Good. Okay, so this tells me I'm dealing with bank. Okay, money's in the bank. Money is cash. Cash is in the bank. Apply your definitions. Bank is which of those 6 rules?
When you say bank is which of those 6 rules?
Which elements?
Referring to like assets.
Yes, which elements?
It's an asset, it's a resource.
Good, there's the answer, asset. Okay, so now I know bank is an asset. Now you need to ask yourself the question, what is happening to the bank account? So tell me what's happening to the bank account of the business. It's increasing, correct. So now look at your 6 rules that you're studying or that you've got in front of you. Where does an asset account increase? On the debit side. See, that's how you get the debit and credit. Notice I don't ask you, do I debit or do I credit this account? Okay, I'm asking you, what do I have and what is happening? Okay, if you know what you have and if you know what's happening, your 6 rules tell you what to do. Does that make sense? Does that make sense? Okay, right, debit plus, I'm going to use 1 million. Okay, that's why I'm putting it on the debit side. Okay, because I know what it is and I know what's happening to it. That's all it is. See, it's understanding. If you can understand the transaction, you can do any transaction. Okay, and you'll see you guys will get better at doing this. Okay, what else do I have? So besides 1 million standing out, you guys also told me that owner gives stood out. So if you see owner gives, what are you thinking about? Good. See, now you know your definitions. So this is telling me that I'm going to affect the capital account. Okay, we know capital is capital. We don't even have to identify it. Capital will always increase on which side? On the credit side. So plus 1 million credits. Okay, you don't have that in your notes. You've got notes, so add it. Okay, put answers. Make your studying easier. Okay, so you've got notes, you've got the textbook, you've got the study guide. Okay, those are all different resources that can help you do well in this particular module course. Okay, so this is what we need to write down for the tier counts. Okay, and this is the most important thing out of everything that I'm going to be telling you over the next few weeks. Okay, if you don't know how to interpret transactions, you're never going to be able to do accounting. Okay, it starts with the interpretation. It starts with understanding what's happening in the question. That's where it starts. Okay, so week 2 is actually more important than week 1. Okay, because week 1 is just studying. Right, knowing what something is isn't a problem. Okay, you can study that. Okay, doing this requires a bit of practice. Okay, that's the challenge. The challenge is, can you do this? Can you identify the keywords from the question? Question.
I'm not sure if I'm. But then, in the first scenario, we looked at the factor that is the million, right?
Correct.
And we've identified that we identified the bank, right?
Correct.
We then went further in identifying the type of
Accounts.
the type of account.
100%.
Asset, correct.
You have to.
So we've identified our asset increase, and an increase on the asset will be on our debit side.
Correct, because you've got 6 rules that tell you where the pluses and minuses are.
Okay. So in the event such as capital,
Yeah?
we're looking at capital. Okay. So with the capital, we're not going to interpret it like, how we have asset.
Well, capital, if you want to, you can say capital is capital.
Okay.
And capital is increasing.
Okay.
That's also fine. If you want to do all the steps, you don't have to for capital, because you guys don't have different types of capital. Capital is just capital. Yeah, so, but you can if you want to. You can say, well, in this instance, did the owner contribute something? Yes. So did I have a capital contribution before they contributed? No, I didn't. Do I have capital contribution after they contributed? Yes, I do. Okay, so it's gone up. Okay, yeah, just bring that forward. Thanks. Did you get the assignment answers? Where did I put that? Oh, I think you took all of them. Oh, it's part of that. No. Where are the extra assignments? Are they in the folder? Okay, you must have taken it out then. Oh, yeah, you took yourself a copy. Awesome, great, yeah. So make sure you've got that. And I also printed this. I asked them to give you this exam. Did you get this as well? Great. Okay, yeah, thank you. Awesome, yeah. So Gmail, perfect. Okay, yeah, the handwriting is fine. Just the first one, SNELLM2. Brilliant, okay. Right. Okay, so yeah, so you guys will have access to last week's, you'll have access to every week. So if you want to watch this again and again and again, it's totally up to you. Okay, it's a private video, so only you will have access to it. So you need to log into Gmail, okay, and then there'll be a link that comes from YouTube straight to your inbox. Okay, you can just click onto that and you can watch it. Okay, you can watch it either here on campus, there are facilities downstairs that you can make use of, or you can watch it off campus. It's totally up to you. Okay, you can watch it on your phone, you can watch it on your tablet, you can watch it on any device that has the internet. Okay. Alright, so that's the first example. Let's apply what we now know in terms of process. Okay, see, this is practice. This is application. Notice I'm not going to study this, so I don't have to go and learn this. The textbook tells you, when you have an acquisition of a loan, what does that mean? I'm taking out a loan. Okay, loan acquisition of a loan means I'm going to go to the bank and I'm going to apply for a loan. That's what that means. The rule says in the textbook that when you receive a loan, the loan is always credited. See, that you can learn if you want to learn lots and lots and lots of transactions. Okay, let's apply what we're doing. We're doing something better, which is analysis and application of the rules that don't change. Right, so let's look at the question. The company obtains a 2 million loan from a bank. What stands out? 2 million. What else? Yes, okay, so the 2 million tells you that you're dealing with bank, fine. What else? The loan, of course. Okay, these are the two things that should stand out. So now let's interpret. See, this is how you do the analysis. Okay, so I know that this company is obtaining a 2 million rand loan from a bank. Do you agree? If I'm obtaining a loan and I'm going to be receiving cash from the bank, is my bank going to go up or down? Correct. So you know that you're getting 2 million. Okay, you're getting physical cash. 2 million is going to be transferred from the bank into your account as a loan. Obviously, you're going to have to pay it back in the future. That's another transaction. Right now, as it stands, I received 2 million from the loan account. So what's going to happen to the bank? Well, let's first ask ourselves, what is it? Bank is what type of element? An asset. If you're getting a 2 million rand loan, what's going to happen to the bank account? It's going to increase. Where do assets increase? Now look at the rules that we looked at last time. Where do assets increase? On the debit side. So we're debiting 2 million plus. That's the first bit. You guys told me that this stood out, loan. So let's interpret what's happening. Okay, do I know what a loan is? That's the first step. Do you know what a loan is? What is it? Good. So I know a loan is a liability. If I'm taking out a loan, what's going to happen to the liability? It's going to go up. Now look at your rule sheet, those 6 rules. Where do you see liability plus? On the credit side. So that's why I'm crediting 2 million. Does that make sense? Okay, now you've got a debit, now you've got a credit, now you've got both. Okay, so a transaction will always affect 2 accounts. One account will go up, one account will go down. Not always the case though. You can have 2 accounts going up. We'll see some scenarios. You can have 2 accounts going down. It can also happen. Okay, but one account will be debited and one account will be credited always. Is that okay?
Can we look at income?
Yes, we're going to look at all the different types. There's a lot here.
Yeah, let's have a look.
Okay, can we finish all of these, and then if we still haven't covered income, we can look at it.
Actually, I need to apply income to this scenario.
You can't apply income to this scenario because this is looking at a loan.
Okay. So,
Okay, you're trying to overcomplicate it by bringing in too many things. Okay, it is what it is. Okay, every transaction will always only have a debit and a credit. Okay, yes, you can have other transactions that have other things being affected, but those are other transactions. Okay, so don't keep it simple. It's one question at a time. One question, one question, one question, one question. Okay, I'm going to do one in this past paper. Okay, 2016. I don't have 2017 yet. I don't think they've posted it up on my UNISA. When they do, please email it to me. We'll do it in class. Okay, definitely. Past papers we're definitely going to do. Right, I'm trying to do questions from the past papers, not questions from your study guide, because they have answers to those. All right, let's rather practice here so we get more done and you guys have more questions that you can use to practice. Okay, you can always go back to your textbook. I'm going to give you some homework that you can do for yourselves to see, are you understanding with us correctly? Are you doing the debit and credit correctly? Okay, but we'll discuss that at the end. Okay, things that you can do as practice. Right, are you guys happy with that one? Great. Number 3. The rule says, if I buy an asset, I must credit the bank. That's what they say. Okay, you can study that, or you can learn the 6 rules and then just practice applying them. Okay, that works a lot better. Okay, so let's go to the question. Here's the scenario. An asset was purchased for 1 million and paid by check. What are we going to circle, highlight, underline? Okay. What else? Yes. Okay, if you want to, you could also put the 1 million with that, paid by check, because that tells you your bank is going to be affected. Do you agree? Okay. Does it matter what asset I'm buying? No, I could have said a vehicle was purchased for 1 million. It doesn't matter. Okay. We're just buying an asset. It could be a vehicle, it could be an equipment, it could be a computer, it could be a furniture item, it could be anything. Right, so if I'm looking at this, do you guys agree if I'm buying an asset, what's going to happen to the bank account? There's the answer. But before you say decrease, you need to tell me what it is. Bank is what? An asset. Why is it an asset? You've got a definition that says resources that are controlled are considered assets. Bank is a resource we control. Is it going up or down? It's decreasing because I'm buying a vehicle. Right, if you're using cash to buy a vehicle, you're not going to end up with more cash. Does that make sense? Okay, it's logical. Okay, it's literally what's happening. That's what it is. Okay, and if you can apply that, you're going to get things right. Right, so bank is an asset, the asset's decreasing. Where do assets decrease? Look at your 6 rules. Good. Credit side. So I'm going to show a credit here, minus 1 million. Got the first bit? Next bit. What did I buy? In this case, an asset, well, I gave it a name, a vehicle. Doesn't matter what the asset's called. I'm just going to write vehicle as our example. Okay, if I'm buying a vehicle, is a vehicle an asset, liability, income, expense, or capital drawings? Good. A vehicle is an asset. What's happening to that account if I'm buying a vehicle? It's increasing, right? If you buy a vehicle, you're going to have more than what you started with, right? No vehicle before you bought it. Now I've got a vehicle. Did your vehicles increase? Yes, they did. Go look at your rule. Where does an asset increase? Debit side. So debit plus 1 million. And now you've done the accounting for that transaction. Okay, this is basics, this is interpretation, this is analysis. Earlier in the slides, I mentioned how important this is. You're going to do this every time you get a question. Doesn't matter what it is. Accounting equation, journals, ledger, financial statements, it doesn't matter. Every single time we see a transaction, you need to be able to interpret it correctly. Okay, you need to be able to take out an account and look at the effect, debit or credit. Make sense? Let's try this one. Okay, so the rule says, if I buy or purchase an asset and I'm using credit, then my creditors are always going to be credited. That's the rule. You can study that, or you can apply the 6 rules that you've got on that golden rule page. Okay, so let's highlight what stands out here. An asset was purchased for 500,000 on account. Yes, the whole thing. Okay, on account means I'm owing someone something. That's a liability. Do you agree? Okay, creditors is a liability. Do you agree? Okay, if you didn't have that on your list, I asked you to find different accounts. You could have added that to your list. Okay, creditors is a liability. Creditors will have a debit or credit. Well, what is it? It's a liability. So if it's a liability, if I'm buying something on credit, am I going to owe more or am I going to owe less? If I'm buying something on credit, am I going to owe more or am I going to owe less? I'm going to owe more. So creditors, you know, is a liability. You know that if I'm buying on credit, I'm going to owe more, I'm not going to owe less. That's logic, right? Okay, if you buy something on credit, that means you're going to have to repay in the future. Okay, so now look at your 6 rules. Where do liabilities increase? On the credit side. That's why I'm crediting 500,000. Make sense? Jot it down, write it in, make sure you've got it. Okay. What did I buy? An asset. Doesn't matter what it is. I'm going to change the name. I'm going to call it equipment now. Makes no difference. Okay, so we just spoke about a vehicle. Let's talk about something different. Equipment was purchased for 500,000 on account. Okay, so if I'm buying equipment, do you know what equipment is? Equipment is an asset. Right, so if you're buying an asset, what's happening to the account? It's increasing, right? You've got more equipment now than you did before. Okay, go back to those 6 rules. Look at those pluses and minuses. Where do you see the plus for an asset? On the debit side. And that's why you're debiting the asset with 500,000. Okay. See, this is knowing what you're doing. Okay, why you're doing it. Okay, it's not just because the textbook told me I must debit this and credit that. Okay. There's 2 ways of doing accounting. One way is by studying it, that's tough, or the other way is by understanding what's happening. That's easier. Okay, because all of you can interpret this. Okay, you can all see that an asset account is going up because I'm buying an asset. And you can all see that if I'm using a liability to buy an asset, I'm going to owe more, I'm not going to owe less. Okay, it's logical, it's straightforward. Okay, as long as you can interpret things correctly, you'll get things right. Okay, now we're looking at the payment. So we just looked at buying something. Now we're going to look at paying off the liability. Here we have a rule that says, if I have a payment to a creditor, the bank is always credited. That's the rule. Let's apply what we know. Okay, so in the question, what stands out? Well, the previous 500,000 purchase on credit is settled. That should stand out. Okay, this should stand out. Okay, so what are they saying? They're saying, I bought something previously, and if I bought something previously, I'm owing someone something. Okay, am I buying more from them? No, I'm actually paying them. Okay, so let's interpret what's happening. If you're paying someone, what's going to happen to your bank account? It's going to decrease. Do you know what bank is? Good. Okay, see, there's your working. That's your thought process. What's in bracket is what you're thinking about. You never have to write that down anywhere. Okay, but if you want to, you can. The examiner's not going to mind seeing that. Okay, it's just additional workings. Okay, so the bank account is decreasing because I'm using cash to pay the outstanding liability. Does that make sense? Okay, look at your rules. Where do assets decrease? So where is the minus for an asset? There's the answer. Minus 500,000. What am I paying off? The previous accounts. So, do I have a liability? Yes, because who would you have bought from? Here's the purchase. You bought from someone, now you need to pay them. Do you agree? Okay, so who do I pay? I pay the creditor. Creditors is what type of account? A liability. If you're paying a creditor, are you going to owe them more or owe them less? You're going to owe them less. Where do liabilities decrease? Look at your 6 rules. Debit side. And that's why you've got debit minus 500,000. Is that okay? Next. Payments from debtors. We need to understand what a debtor is. What is a debtor to the business? A customer. Customer that owes. Do you agree? Okay, so debtor is anyone who has bought something from the business who still needs to pay the business. Okay, so the business is going to have a credit sale. Right, so here we've got a debtor sending a check to settle the outstanding debt. What stands out? Debtor Sending a check to settle outstanding debt, 1 million. Okay, so who are we in this relationship? The business or the debtor? We're the business. Right, so as a business, do we want debtors to send us checks? Yes, because that'll be a form of payment. Okay, so from the business's point of view, what's going to happen to your bank account? It's going to increase. Good. You're going to get something from the debtors. You're going to get cash from the debtors. Right, what's happening to the bank? Increasing. Okay, you know bank is an asset. You know it's increasing because you're receiving money from the debtor. Do you guys agree? Okay, so if I'm receiving money from the debtor and it's bank is affected positively, where do assets account increase? Correct. So debit for the plus 1 million. Okay, who did this come from? The debtor. Okay, so if this is coming from the debtor, is the debtor going to go up or down? What's going to happen to the debtor's account? Is the debtor going to go up or down? Correct. Is the customer going to owe you more or they're going to owe you less? They are going to owe you less. Do you agree? If they're paying you, you're not going to have more debtors. You'll have less debtors. What type of account is debtor? Asset. Decrease. Okay, so notice here you had an asset that was increasing and an asset that was decreasing. But you've still got a debit and credit. Look at your rules. Where do asset accounts decrease? Good, on the credit side. Minus 1 million. Okay, and that's the interpretation. Happy?
Creditors are people we owe, right?
Creditors are people you owe, correct. You buy from your creditors, you sell to your debtors. Makes sense. Okay, owner takes 100,000 from the business. What stands out? Owner takes 100,000. Okay, so what did the owner take? Cash. What account represents our cash? The bank. What type of account is bank? An asset. What's happening to the account if the owner's taking? It's decreasing. Where does an asset account decrease? On the credit side. Good. See, you've got it now. It's not too bad. Take some practice. After a while, you get used to it. Okay. Right, the last bit is, why did the owner take? It was for personal use. Okay, we'll answer your question just now. Let's just finish. Okay. Drawings is what? Drawings is drawings. What's happening to drawings? It's going up. Okay, before did I have any drawings? I had 0 drawings. Do I now have drawings in the business? Yes. Okay, remember accounting is accounting for what's happening in the business. Okay, so I didn't have drawings. Now I have drawings. The account for drawings is going up. Drawings will always debit plus 100,000. Okay, question? They can ask you both. The theory that you guys are tested on come from the last few chapters in your book. Practice management, trust accounts, how to manage a law practice, all of that. Okay, you'll see the last chapters in your book are theory, specific to your module, okay, being law practitioners. Okay, you won't find that in the textbook. The textbook doesn't have anything about law practitioners because your textbook is an accounting textbook covering debits and credits only. Okay, remember accounting is broad. It can be applied in different industries. Lawyers use accounting. Doctors use accounting. Everyone uses accounting because everything deals with rands and cents. The textbook is better for identifying more examples and for covering more detailed, let's say, explanations around what we're covering in these chapters. Yeah, the textbook's not going to help you with the law practitioner stuff that's in your study guide. Okay, the study guide is what UNISA generally tests for you in terms of theory questions. Okay, so they'll give you short questions about practice management, how to manage your business as a law practitioner. Okay, that's what I've seen from past papers. Not to say it can't change, it can. In your assignment, the one that I gave you a solution for that you can confirm your answers with was all generally practical questions. There were one or two theory questions relating to like rules, okay, but there wasn't much. Okay, and why? Because that's the assignment, that's not the exam. Okay, if you look at the exam is generally 99% practical, 1% is theory. Okay, there's not a lot of theory. For you guys, if they do give you theory, it's going to be from the study guide, okay, the last two chapters. Okay, but we'll definitely look at past papers later. Okay, we're going to actually look at one example today to show you how this is applied to a question. Okay, because I'm going to show you how to do it for a past paper question. Then you can go to your study guide where you've been given lots of revision exercises where they give you the questions. Then you can follow the same approach and then check it with their solution. All right, and see, well, am I still getting it right? Okay, that's what I'm looking at. Okay. Right, we haven't finished with this yet, so let's keep going. Here's your income one. Receiving income. The rule says if you receive income and it's in the form of cash, bank is always going to go up. Here's the transaction. Cash sales of 3 million. This stands out, sales. What definition does sales meet? Is it an asset? It's not a resource. Is sales a liability? It's not an obligation. Is sales an income? Yes, that makes sense. If I sell something, I get something, so that's an increase in benefits. Do you agree? Okay, so sales is an income. Do you agree? What is happening to the income? It's increasing because you're selling. I had 0 sales, now I've sold. Now I've got 1 sale. Does that make sense? Okay. What am I getting from the sale? Cash. Cash is going to affect which account? Bank. Good. Bank is what type of account? An asset. So if you're selling, are you going to get more cash or less cash? You're going to get more cash. So we're going to increase that account. Perfect. Okay, so bank asset increase. Where do assets increase? See, now all you need to do is just go look at your rules. Okay, your DEDLIC, remember we used that acronym? Okay, so even if you can't study and remember those rules, just write the acronym down. Okay, what am I dealing with? Asset. Oh, debit, asset plus. Now I've got it. Okay, I'm going to give you the video. It's online, so I'm going to assign into SACs. Okay, so Lebogang. Oh, Carabello. Last week was a public holiday, the week before. Yeah, the week before. Sorry, I'm saying last week, the last time we had class. Okay. Oh, all right. Sorry you weren't here for the first one. Okay, it's all available to you. Okay. All right, so bank is a asset. The asset is increasing. So I'm going to show plus 3 million here. Do you agree? Okay. Sales is an income. On your rules, where does the income increase? On the credit side. Credit plus 3 million. See, that's how you get the debit and credit. Here, notice, did I ask you when I first started this question, give me the debit and credit? No, I didn't. I asked you to understand what's being described in the question. Okay, because that's everything. If you know what you've got, it's easy to relate the debits and credits. Okay, because debits just mean left and right. That's all it is. Okay. Right, next bit. Okay, let me ask you to try this one on your own. Okay, I've been doing quite a few. Right, take a minute or two to see if you would be able to analyze and interpret this transaction. Let's go. Okay, so we were looking at, yes, oh sorry, I changed the slides. 7B, that's the one. Okay, that's the one we're looking at. The telephone bill is paid by check. What happened? Good. Paid by is important because now I know that this is being affected. Good. This is what? Yeah, but what is it?
It's a liability.
How is a telephone a liability? Yes. Okay, if you haven't paid your bill, it becomes a liability. Am I paying my bill? Yes. So it's an outflow of benefits. Okay, but telephone will always be seen as a expense. Okay, because you're going to be using it up. Okay, a decrease in benefits. Okay, think about it. If you make a call, okay, when you're talking on the phone, there's an outflow of benefits. Airtime is being used. Outflow of benefits. Meet the definition of an expense. Telephone is an expense. Did I have an expense before I used the telephone? No, so there was zero as an expense. See, accounting is looking at recording transactions. Okay, so do you guys agree I had zero expense before I paid the bill? I now have an expense, so I'm going to record an expense. See, it's recording an expense. We're not talking about am I paying it off or not. Okay, obviously you're not going to have an expense after you've paid it. Okay, but you're still going to record the expense that you've paid. There's a difference, a slight difference. Okay, so telephone is an expense. The expense is going up because I'm recording an expense. Where do expenses increase? On the debit side. Good. So you guys would have shown +5 there. Then, hopefully you would have gotten this right. Bank is what? An asset. What's happening to it? It's decreasing. Now you look at your rule. So I go back to this. There's it. Where does an asset decrease? There we go. There's the minus for the asset. So all I need to do is show a credit for -5,000. And there's another interpretation. Okay, so now you guys have applied your rules, you've applied your definitions, and you've interpreted a transaction. Okay, happy. Okay, this is what I'm going to do. Credit sales. As soon as you see that, you should be thinking about that. Debtors. Okay, you can't have anything other than debtors if you have a credit sale. It's very specific. Right, certain characteristics make up certain things. Okay, so when I'm looking at, so for example, a chair and a table are very different items. Okay, obviously a table has a specific dimension to it. Okay, a chair also has a specific dimension to it. It looks a specific way. Okay, so sales that are on credit have a specific, let's say, characteristic that relates to debtors. Okay, debtors are people who we sell to on credit. Okay, so that's the first word that should stand out. So I'm going to write it down. Okay, let's think about the definitions now. Which account does debtors fall under? What element does it fall under? Is it an asset? Yes, it would. Okay, because why is it an asset? Well, it's a resource. Am I going to get something from these customers in the future? Yes, they're going to pay me in the future, right? Okay, so debtors is an asset that's increasing. Where do assets increase? On the debit side, +1 million. Okay, why did I have debtors? It's because I sold. Okay, you needed two sides to the transaction. Okay, so the sales part, this bit over here, this is going to be the other transaction. What type of account is sales? It's an income. Okay, it's an increase in benefit. If I sell something, I get something. If sales is an income, it's going up because I'm selling. So I didn't have a sale. I had 0 sales before. Now I've got 1 million sales. Where do income accounts increase? Credit side. That's why you're going to do this. Debit the debtors, credit the sales with plus 1 million. Okay? Here's another one. Stationery bought on account from company B. What words stand out? Stationery. What else? On account. Good. As soon as you see on account, you know you're going to owe someone. People who we buy from are called creditors. Does that make sense? Okay, so if I'm looking at creditors, do I know what it is? Good. See, you need to identify what it is. So do you guys agree, if I have a creditor, I'm owing someone something. That meets the definition of an obligation. An obligation is a liability. So a liability will be affected. If I'm buying stationery from company B, am I going to owe them more or less? I'm going to owe them more. So the liability will increase. Okay, now go to your rule. Where do liabilities increase? There's it, on the credit side. Perfect. So I'm going to put a plus 10,000 over there on the credit side. What did I buy? Stationery. What is it? It's an expense because you use it up. Okay, stationery is used up. It's like fuel. Okay, it's like water and electricity. It's used up. Okay, you use your stationery. You use your petrol. You use your water and electricity. Does it make sense? Okay, so if I'm using stationery, stationery is what? An expense. Okay, stationery is an expense. What's happening to it? Well, I had 0 expense before I paid it. Now do I have an expense? Yes, I'm recording the expense. Okay, so if I'm recording the expense, I'm recording an expense for stationery. The expenses are going to go up. It's going to be debited. Plus 10,000 on that side. Debit. Is that okay? Okay. Right, and that basically covers your interpretation, your analysis. Something else that's spoken about in study unit 5 is the accounting process. Right now, you guys are still looking at step number 1. Step number 1 is the most important step. Why? Because you need to interpret and understand what's happening. Is it cash or is it credit? Is it an increase or is it a decrease? Okay, that's the most important step, is identifying what's happening in the transaction. Because then later, you'll look at journals, you'll look at ledger, you'll look at statements. Okay, trial balance, it's spoken about, you don't really have to draw it up. Okay, it's not something that's really tested. Okay, journals are tested, ledgers are tested, financial statements are tested. Transactions are obviously tested because they come up everywhere. Source documents, they're spoken about, but you're not going to have to fill them in. Okay, they're not going to ask you to complete an invoice or fill out the details. Okay, they'll talk about invoices and credit notes and debit notes and checks and counterfoils and deposit slips, but they're not going to ask you to create them. That's more bookkeeping. Okay, you guys are doing accounting, so accounting is more the interpretation. Okay, what's actually happening. Is that right? Okay. Maybe before we look at the general ledger, let's apply what we know. Okay, so I'm going to quickly just change focus slightly. I'm going to open up the past paper that you guys have. Okay. October, November 2016. Okay, let's create a solution for the first question. Right, you'll get solutions for all of them later on. Okay, I've got lots of them for you to practice. Okay, FAC1503. This is October, November 2016. All right, we're looking at the solution, the workings.
So we don't have copies of the solutions.
You don't have copies of the solutions because I haven't sent them to you yet. Okay, we're going to complete these questions. Okay, older past papers, I've got them. 2016, 2017, we need to create them. Okay, we need to build those solutions. That's why I want newer past papers, so we can get through other types of questions. Okay, so let's label the sheet. I'm going to call the sheet question. I'm looking at question number 2. Okay, good exam technique. So let me discuss some exam technique while we're looking at past papers. Right, so this is the past paper that we're going to be discussing. October, November 2016. What am I going to do? I'm going to look at this, the proposed timetable. Okay, and I've obviously got 5 questions I need to answer in the 2 hours that I have in order to pass. Right, I'm loving question number 2. Why? It's the first few chapters in your textbook. The very first thing that they tested you guys on, or questioned you guys on, in your textbook is the counting equation, because that's basic analysis and interpretation. Right, how much marks am I going to get for this? Well, I'm going to get 24% for knowing some debits and credits and for knowing how to apply my rules. Do you guys agree? Okay, so when focusing on exam technique, start with questions that are easy. Don't start with the most difficult. That's silly. Okay, now you're going to start with the most difficult. Now you're going to be stressing yourself out. It's going to take you longer than the time allocated. Then you're going to rush to do the easy stuff. Okay, the correct exam technique, start with the easy stuff. Make sure you pass the exam. Then you can go for your distinction. Okay, so we're going to focus on trying to get 50. Okay, so I'm already going to get 24% by doing the counting equation. Okay, that's one application. This application requires you to know your debits and credits and to do interpretation like we're doing now. Okay, that's why I want to do the question. Okay, so question 2, there's it. 24 marks, 29 minutes. It's not even going to take us that long to do it, you'll see. Okay, scroll down. We need this. Analyze the following transactions in tabular format. Okay, so let's follow the instructions. Date, debit, credit, and then asset or assets equal owner's equity and liabilities. Owner's equity, equity, plus liabilities. Okay, that's what I've been asked to do for all of them. Okay, so asset there, liability there. Okay, we don't need so much space here. We need more space there. Too much. Okay, better. All right, so let's have a look at how we would approach this question. Okay, right now we're practicing, so I'm not expecting you guys to do this. Later on, you guys can do your own past papers and you can check them with your solutions. Okay, right now I'm showing you how to do it. Okay, so if you get a question like this, this is how you get there. Okay, so you'll have answer, you'll have question, this is the how to answer. Okay, this is what you're doing in the exam. Okay, right, so if this was the exam, and I'm looking at question number 2, I need to interpret these transactions. Okay, and I'm looking at all of these different transactions, and I'm trying to interpret what's happening in the transaction. Okay, so when focusing on day 2, let's read day 2 and let's highlight anything that stands out. Okay, purchase goods on credit from C for 3150. The terms and conditions for purchasing goods on credit from C provided that a settlement discount of 12% will be granted if PPC pays their account within 15 days. All that other stuff makes no difference to the question. Okay, because remember, you need to interpret the key. Okay, what is the focus? Okay, so you guys are looking at this question. What is the focus? purchasing goods on credit. Perfect. That's the focus. Right, so we just spoke about credit. Who do we buy goods on credit from? Creditors. Right, so day 2. Creditors is what type of account? A liability. What's happening to the liability if you're buying from them on credit? It's increasing. See, there's my thought process. Now look at my rule, look at your rules. Where do liabilities increase? On the credit side. That's how you get this. Creditors, bracket, liability increase. Okay, that's what you would put there. Notice the bracket isn't what your niece is going to want in your answer. Okay, they're not going to want to see the brackets. Okay, I'm putting the bracket in so you know how I got there. Okay, I know it's a liability, I know it's increasing, then I know it's a credit. Does that make sense? Okay, what did I buy? I bought goods. Okay, obviously later on we'll learn about periodic and perpetual. Okay, some of you might know that if you've looked at later modules. I'm not expecting you to know that now, so don't worry about it. I will tell you what goods are for periodic. Goods for periodic are called purchases. And purchases is an expense that's increasing. Okay, you guys will know that later once we've covered the theory. Okay, then you can go back and see, oh, okay, now I know why we did that. Right, remember accounting is very like separate in terms of here's a chapter, here's a chapter, here's a chapter, here's a chapter, and then at the end it all gets put into one question. Okay, financial statements. Right, so you need to cover all the different chapters and then you'll have an idea of what all of these things are. Okay, right now we're just practicing application. That's all I want to focus on here. Don't worry about all the other stuff, we'll look at it later. Okay, expenses increase. Okay, last week, or week before rather, we spoke about equity. Okay, remember we spoke about capital. See, this is revision from last time. How does capital affect owner's equity? How does capital affect owner's equity? If capital increases, what's going to happen to owner's equity? Will the owner be entitled to more or less? The owner will be entitled to more. There's the answer. Okay. Income. If income increases, is the owner going to be entitled to more or less? More. See, that was something that we covered previously. Okay, then we've got the other two. If drawings increases, what's going to happen to owner's equity? Correct. The owner's not going to be entitled to more if they're drawing. Okay, so the more drawings you have, the less owner's equity you've got. Straightforward. Okay, we spoke about that last time. Just revision. Expenses. If expenses go up, what's going to happen to owner's equity? It's going to decrease. Perfect. Okay, so now I know what the different accounts are. So these two are going to affect owner's equity negatively. These two are going to affect owner's equity positively. Okay, there are two different accounts, but there's only 6. Now you've got assets, now you've got liabilities, you've got capital, income, drawings, expenses. Those are the only 6 that you're going to get. Happy? Okay. So if I'm looking at an expense, if an expense is going to increase, what is going to happen to owner's equity? Decrease. So I'll show minus and the amount. What is the amount here? 3150. Creditors is a liability. Where do liabilities go up? On the credit. We spoke about that. A liability will go up, so we'll have to show plus 3150. And there's your accounting equation. Right. And see, that's how your textbook is doing it in some of these examples. Okay, that's why I'm encouraging you guys to do homework by looking at those practice activities. All the practice activities in your textbook have answers. Okay, so if you don't understand how you got there after having done it, so what I don't want you guys to do is look at the answer and look at the question and say, okay, I can do it. That's bad. Okay, you need to actually do the questions, okay, because that's practice. We spoke about this as being a skill. It's like driving a car. Right, you know where the gears are, you know where the steering wheel is, you know where the pedals are. It's not going to make you a better driver by studying the car. Do you agree? You need to drive the vehicle. Okay, and that's why I'm asking you guys, if you are going to practice, you need to actually do the questions. So if you see a question on an accounting equation after today, you can attempt it. Okay, obviously accounting equation was spoken about in the first few chapters. All right, so this is how you would do it. Okay, let's look at the next one. Number 4. An invoice to the amount of 1460 was issued to K for goods sold to him on credit. This should have stood out. On credit means debtors. The invoice was an amount of that. Okay, so is this a sale? Yes, because if you're issuing an invoice to a debtor, you've sold him something. Do you agree? Okay, so now let's think about our rules. Debtors is what? An asset. What's happening to the asset? It's increasing because I have a debtor. I didn't have one before. Okay, there's your one amount. Where do assets increase? On the debit side. Just look at your rules. Okay, so what do? I write down debtors, asset, increase. That's just thought process. Okay, for number 4. Okay, what am I crediting? Well, we just spoke about debtors. Don't debtors buy from the business and don't we sell to them? Okay, so if I sell to them, I'll have sales, income, increase. Okay, there's your debit and credits. Okay, now I need to get the easy marks. Assets increase where? On the debit side. So plus asset 1460. Sales is an income. If sales goes up, what happens to owner's equity? It increases. So the same thing over there. There's your asset, there's your equity. Happy? Okay. You see, you can't get the accounting equation if you can't do analysis. Okay, you can't do journals if you don't know analysis. You can't do financial statements if you don't know analysis. Okay, that's why I make sure that this is like something that you can do. Okay, it's so important. After this week, I want you guys to be comfortable with applying the rules. Last time I asked you to study the rules. Know what an asset is. Know what a liability is. Okay, this week, I want you to get better at applying the rules. Okay, so when I have transactions, I want you guys to be able to tell me what accounts are being affected. That's the key. Okay, right now, I'm showing you what to do. Okay. 8. A credit note to the amount of 460 was issued to K for goods returned by him. Right, so was K happy with the purchase? No. The customer, K Mogotsi, came and returned goods. Good or bad for the business? Bad. Are you going to have more debtors or less debtors? Less. It's straightforward, right? If someone comes and gives you back the goods that they bought, are they still your debtor? No. Okay, so this is going to be debtors, asset decrease. Yeah, you're not going to have a debtor if they've returned the goods that they bought. Right, the debtors come down. Are you going to have a sale when they return the goods to you? No, you won't. So you'll have a sales return. Expense increase. Okay. Right, this was day 8. Sales return is an expense. If the expense goes up, what happens to owner's equity? It decreases. So 460 is going to come off your equity. Debtors is an asset. It's decreasing. Assets decrease, so minus 460, and that's it. That's number 8. Are you guys okay with that? Good. Okay, everyone got that? Can we look at the next one? All right, next. 11. A debtor, G, who owed 1,080 to PPC was declared insolvent by N. His account must be written off. Okay, so a debtor, let's keep it simple. A debtor can't pay. A debtor is going to refuse to pay, can't pay, they're not going to pay. So what are you going to do to the debtor's account? Increase or decrease? You're going to decrease. Debtors is an asset that's decreasing because you're writing it off. If you're writing it off, they're not going to pay. Does that make sense? Right, so debtors don't pay. There's it. Debtors asset decrease. Okay, this we'll look at it later on. Credit losses. That's what you call it, or bad debt. Credit losses / bad debts. Okay, so don't worry about it now. Later on it will make more sense. Notice, see, these are other accounts that you guys can put in that table that we had. Remember the table I asked you to complete? Okay, you could now put credit losses or bad debt under which column? Expenses. Because now we've just spoken about another one. Okay, later on we'll learn about it in detail. Right now, I'm telling you what it is. Okay, it can't change. Credit losses are credit losses are credit losses. Credit losses are expenses. Okay, so assets decrease here. How much did we write off? 1080. If expenses go up, owner's equity comes down, minus 1080. And there's it. Next. Okay, let me wait for you. Are you guys okay? Got that? Happy? Okay, next, number 12. Again, apply the interpretation. Interpretation is everything. Number 12 says, the owner transferred his personal delivery vehicle with a value of 45 to the entity. What stands out for you guys here? Good. Owner giving the business a vehicle. Right, so capital, I'm happy with that. Okay, that's an easy one. That's bonus, right? Why? Because capital is C for capital, C for credit. So without thinking, you can put that there. You don't even have to put capital credit. If you want to, you can. C for capital, C for credit, it's going to go there. Okay, capital affects owner's equity how? Positively. So plus 45,000. Okay, the big question is, what did the owner give? A vehicle, which is an asset, yes. Okay, so if the asset is coming into the business, does the business have an asset or not? Will it increase or decrease? Increase. So vehicle, bracket asset increase. There we go. Where do assets increase? On the debit side. Now I know why I've got that. Okay, the bracket is your working. That's what you're thinking about. Okay, I put it in because it helps. Assets increase, so plus 45 there, and that's another transaction complete. Makes sense? Everyone with me? Can we move on? Okay, next one. 15. Let's have a look. Received 1,000 from K, a debtor, in full settlement of his account. If you're receiving 1,000, is that good or bad? That's good. What's going to happen to your bank account? It's going to go up. Bank is what type of account? An asset. Where do assets increase? On the debit side. You've got half of it. Bank, asset, increase. Who are you getting this money from? A debtor. Are you going to have more debtors or less debtors? Less debtors. Where or what is debtors? Debtors is a asset. What's happening to the asset? It's decreasing. Where do assets decrease? Look at the rules. Credit side. That's how you get the answer. Okay, so debtors asset decrease, that's why it's a credit. Okay, so notice in this example, you had an asset going up and an asset going down. So I'm going to show plus here, 1,000, and I'm going to show minus here, 1,000. And that's it. Or you can just show plus, minus, up to you. Okay, I prefer showing it like that. Doesn't matter, as long as you show plus and minus. Make sense? Are we okay? All right. 16, another transaction. Let's go back and read it. paid the amount owed to C, refer to 2nd March. Okay, so now I've got to go all the way back here, and I need to read that again. Right, so now the second part is relevant, because the second part is actually a payment. Do you agree? If I'm paying, am I going to get a discount? Yes, so do I pay the full amount? No, I don't pay the full amount because I get a discount. I only pay the net amount. Make sense? Okay, so let's discuss that. Okay, so looking at this, you guys can do 1, 2, 3, 4, 5, 6 of the 7 that we've looked at so far. You come to number 7, now you panic a little bit because this is a difficult one. Okay, it's still possible to pass the question. Right, so as long as you're passing every question, that's the key. Don't worry if you don't finish the paper. With accounting, sometimes you don't, because sometimes it's time pressure, it's time constraint. Okay, but even if you don't finish, you should at least still pass each question. So now, even if my time is up, which it isn't, we've still got lots of time, we've only spent 15 minutes now on this question, okay, I can end the question and I can still pass. Okay, so as long as you're doing everything in the exam, question by question, and sticking to the time allocation. Time allocation is actually more important, to be honest, okay, with you. Right, this is what I'm looking at. After 29 minutes, you move on. Okay, because you rather pass each question than leave something out. If you leave stuff out, you're leaving easy marks. Okay, if I don't complete this question, I lost all those easy marks. And that's bad. Okay, so that's exam technique. Right, we'll look at that more later on. Okay, so the question said we paid the amount owed to Clark, and this was on the 2nd. Is this within 15 days? Yes. 15 days from the 2nd takes you to the 17th. So is the discount applicable? Yes, it is. How much did you buy? Well, this is a working. Okay. Outstanding amount, so creditors. Creditors equals, I bought a 315, bracket 2nd of, what month was this? March. Do you guys agree? Okay, we pay within 15 days, we're going to get a discount. Do you guys agree? Okay, so how much am I actually going to pay? Well, the discount is 12%. So what is 12% of 3150? Let's work it out. 3150 times 12% is 378. Okay, so that means I end up paying 3150 minus 378, close brackets, equals, I end up paying that amount. Okay, so this is what I pay. That's my payment. That's my discount. And that's the outstanding liability. Okay, we'll learn about this later when we get to the notes. Okay, you have a note summarizing all of that. Okay, so don't stress too much about it now. Okay, for some of you, maybe if you've gone ahead, it makes sense. Maybe if it doesn't, don't worry. Okay, we'll cover it later. Right now, I'm only interested in, do you know how to apply the rules? That's all. Okay, so I'll do that for you. You can do that for yourselves later. Okay? If I'm paying a creditor, now see, this is where you come into it. What happens to the account? First of all, tell me what it is. Creditors is a liability. If I'm paying, what's happening to it? It decreases 100%. Okay, so if I'm paying a creditor, it's going to decrease. Where do liabilities decrease? On the debit side. There's the answer. So that's what I put there. Creditors bracket liability decrease. Right, if I'm paying, what's going to happen to my bank? It's going to decrease. So bank asset decrease. And if I'm getting a discount, is this discount received or discount allowed? Think about it. Did you receive a discount or did you allow a discount? You received a discount, isn't it? I'm paying. So when you pay and you get a discount, it's a discount that you've received. Okay, so this you might not have known, but it's not a problem. Okay, later on you'll know what it is. Discount received. Brackets, income, increase. Wrong side, sorry, before you write that. Okay, income accounts increase where? On the credit side. Okay, so now we can record. Bank is an asset, it's going to decrease, so minus 2772. Creditors is liability, so minus 3150. And bank discount rather is an income. If the income goes up, owner's equity will go up, plus 378. See, and that's the distinction part of that question. Okay, that was the difficult transaction. You can't really answer it yourselves yet until we've covered the note for it, with it in the textbook, okay, in the study guide, okay, and in the notes. Right, so that's just something else to consider. What you should be able to do is that. You should be able to tell me that if I'm paying a creditor, liability comes down. You should be able to tell me that if I'm paying, bank is going to come down. Okay, those are the two things that you should be able to tell me after what we've covered now. Okay. All right, the last one. Number 25. Goods sold for 7,530 cash was incorrectly recorded in the debtors control column of the cash receipts journal. Okay, we need to correct the error. Okay, we haven't discussed journals yet. That's the last bit we need to do today. Okay, let's just discuss what a journal is. Okay, what the purpose of a journal is. Okay, so I'm going to do this one. I'll explain what I'm doing. So later on when we do cover more errors, okay, you guys will be able to approach this. Okay, so goods sold for 7,530 cash. Okay, this was goods sold. So goods sold for cash. I should have recorded. Okay, this you would be able to do. Debit the bank, asset increase, credit the sales, income increase. Okay, that you can do. Right, this is what I should have recorded when I sold goods for cash, because that's what they said. They say it was incorrectly recorded in the debtors control column of the cash receipts journal. Right, so what does that mean? Well, in the cash receipts, which we'll talk about just now, you would debit the bank, asset, increase. Okay, asterisk, this is the cash receipts journal, CRJ. Okay, bank always goes up, cash receipts. If you get something, it's going to increase your bank. Okay, so they said it was incorrectly recorded in that journal. And then you would have credited the debtors, asset, decrease. Okay, so this is what happened, which was the mistake. This is the mistake. Okay, so they incorrectly posted this to the debtors column, and this was in the cash receipts journal. Okay, so bank would have gone up, debtors would have been affected. Okay, this is, I shouldn't have done that. Okay, what should I have done? I should have debited the bank, and I should have credited the sales. Okay, so did I debit bank? Yes, I did debit bank. Okay, so I've debited bank, so that's fine. But have I credited sales? No, I haven't. Okay, so I'm going to have to credit sales, so that'll go here. Okay, and this is the mistake, so this needs to be reversed out. Okay, so that needs to be reversed out. How do I get rid of a credit? Processor, debit. So you would debit the debtors asset increase. Okay, that would have been the correction that you would have had to have recorded for that transaction. Okay, because now you've corrected it. Okay, but like I said, I'm not expecting you to do that yet, okay, because you haven't done enough of the analysis. Okay, all I'm reading here is goods sold. Okay, so as long as you're happy with that bit. I sold goods for cash, debit bank, credit sales. That you should have followed. like perfectly. Okay, the rest you guys can come back to later on. Right, so debtors asset increase plus 7530. Sales income increase plus 7530. Save. And that's it. 24 marks later, and that didn't take us 29 minutes. It took us 25 minutes. Okay. Right, and that's even explaining it. Right, so there is enough time in the exam. You just need to work carefully. You need to work accurately. Okay, don't feel like you don't have enough time. There is enough time. Just be careful with your interpretation. Interpretation is everything. Okay, we'll save that. So once we've completed all the questions for October, November 2016, then I'll send you the complete answer for it. Okay, right now we're just looking at different application. Okay. Let's go back to our notes. A little bit of theory just to end off. Okay. All right, so when looking at the rest of the theory, I'm just discussing what journals are here. Okay. We spoke about all these rules for different accounts: assets, liabilities, income, expenses, capital, and drawings. Okay, you have a set of rules that have T accounts. Okay, what is a T account? It's this: general ledger. Okay, so when I refer to a T account, I'm talking about the general ledger. That's what you're looking at. A general ledger is just a lot of T accounts. Why do you think general ledger accounts are important? Any idea? So why do you think all these T accounts are important? That's the question. Separate recording of each transaction. Good. Into what? Into different accounts. Okay, so do you agree? When we looked at these examples previously, did I have more than one transaction that affected bank? Yes. Did this transaction affect bank? Yes. Did this transaction affect bank? Yes. Did this transaction affect bank? Yes. Okay, so notice, different transactions will affect different accounts, but they're all going to affect the accounts either positively or negatively. Right, so is it possible to group similar transactions? Yes, and that's the purpose of a journal. A ledger, which is what we're looking at here, is analyzing a specific account. That's the key. Okay, so we're looking at analysis. Right, so do you agree, if I look at bank, I can analyze what's happening in the bank account. I can see if the bank is going up, or I can see if the bank is going down. And I can see why the bank is going up, or why the bank is going down. If I look at something like this: debit, bank, credit, capital. Okay, what transaction was or is that describing? If you had to tell me what the transaction would have said, what would the transaction have said?
That the bank account is debited, which means it's increased, and then the capital account is decreased.
No, it's not increase and decrease. See, you're confusing increase and decrease. Both accounts are increasing. There's the answer. The owner has given. Exactly. Okay, so if you had to give me a transaction for that, you would say the owner gave X to the business. It could be what we saw earlier, 1 million. Okay, that's one of your examples. Right, so the owner contributes 1 million capital to the business, or the owner gives the business 1 million, full stop. Right, if the owner gives the business 1 million, are you going to affect the bank positively? Yes. Okay, so am I going to debit or credit the bank? I'm going to debit the bank. Okay, we don't write debit there. What we would do is we would write capital here. Okay, capital, and we would write 1 million. See, and that's general ledger. General ledger is looking at analyzing the accounts that are being affected by, in terms of the contra account. So you'll see if you've gone through the theory, they talk about a contra account. That came from chapter I think 2 or 3. Okay, the introduction stuff. Okay, a contra account just means the other account. Okay, so if I'm talking about bank, what is the contra account for bank? Capital. If I'm talking about capital, what is the contra account for capital? Bank. Okay, contra means they go together. It's a contra account. Okay, so every debit must have a credit. Okay, so in bank, I'm going to write what? Capital. Right, and then I want you to draw this. So I'm going to draw a little account here called capital. Okay, and what am I going to write in capital? Bank. 1 million. See, those are control accounts. Okay, so that's the purpose of a general ledger. The purpose of a general ledger is to analyze what's happening in a specific account. The capital, the bank, the telephone, the sales, the whatever. Okay, you're looking at a specific account and you're looking at what transactions affected that account. That's what you're looking at. Does that make sense? Okay, awesome. Right, now we need to look at just some theory, trial balance. We've spoken about debits and credits. A trial balance is part of the accounting process. The trial balance is going to check that debits are equal the credits. That's what you're looking at. Okay, must the debits always equal the credits? If it doesn't, then there's an error. There's a mistake. Okay, so we need to check. We're not going to draw up statements if we have errors. Okay, statements need to be accurate. We need to do the trial balance to check that. Okay, you're not going to draw up a trial balance. You'll be given a trial balance. Right, so if you look at past papers, so for example, we had a past paper here. Let me show you a trial balance. There's a trial balance. Okay, so in this particular past paper, here's a trial balance with lots and lots of different accounts and debits and credits. Even with the trial balance, you need to be able to tell me what those accounts are. Okay, so let's do some of them. Sales is what? And income. You know income has a plus where? Where does income have a plus? On the credit side. And what do you know? The balance is on the plus. Okay, so where do balances go? On the positive side. Okay, so an income account will have a balance on the credit side because income accounts have pluses on the credit side. Does that make sense? Okay, that's something to add here. Trial balance, NB, know your rules. The rules determine the balances. Okay, here's another example. Do you guys know what bank is? What is it? Good. Bank is an asset. See there, A for asset. Okay, so now if I know bank is an asset, will I know where the balance is? Yes, and what do you know? You have a debit balance for the bank. So that's correct. Okay, 50,000 will be an asset, so it will go on the debit side. Does that make sense? See how you can apply your rules just by knowing your rules. There's so much you can do with your rules. You just need to know how to use them. Let's do another one. Machinery. What is it? Correct. Machinery is an asset because it meets the definition of a resource controlled by the business. What is a vehicle? An asset. Meets the definition of a resource controlled by the business. Creditors control. What is it? Creditor is a creditor is who? Yes, it's someone you owe. Okay, if I buy something from someone and don't pay, they're my creditor. A creditor is an obligation. Okay, so credit is a liability. A liability has a plus on which side? Yes. So where do you think you'll see the balance? On the credit side. You see how important it is to know what the balances are? Okay, you need to know what they are. Okay, so even later on, you can't do this question now because we haven't covered enough. Okay, insurance, what is it? Correct. Insurance is an expense. If you pay insurance, it's an decrease rather, of benefits. What is wages?
Expense.
Good. What is admin expense? Correct. Some of them are as straightforward as that. Okay, so sometimes they give you the answer in the question. You just need to read carefully. Rent expense. What is repairs and maintenance? Expense. That's why you've got it over there. Okay, so see, I'm just trying to show you other types of accounts because I asked you last time to go and look through your book and find these other things and put them in those columns. Asset, liability, income, expense, capital, drawings. Okay, so we're going to do more of that as we go through more questions. Printing is what? Last one. An expense. Okay, all of those have debits because they're all expenses. Great. Okay, let's go back to our notes. There we go. Okay, the accounting process. We've covered that. What is the goal of accounting? We spoke about this last time. Decision making, presenting information. People need information to make decisions. What are you going to be creating? Financial statements. Right now, I don't want you guys to worry about having to draw up statements yet because we haven't covered enough. Okay, at the end of your textbook, toward the end, you then need to draw up statements. Okay, and in order to draw up statements, you need to know what they look like. Okay, so please, if you haven't looked at the format, just appreciate the format. Either look at the textbook or look at the study guide. Okay, and just appreciate what the format looks like. What I do want to discuss here is some revision. Statement of comprehensive income. It's also profit and loss. Okay, what do I show in my profit and loss? Income and expenses. See, notice those are two of the accounting elements. Okay, so if I'm going to draw up a statement of comprehensive income, I'm going to show income and expenses. Statement of financial position. We spoke about financial position previous time. How do I determine someone's financial position? What am I going to look at? The assets and the liabilities. Do you agree? Okay, so if someone has a lot of assets but just as much liabilities, good or bad position? Okay, so let's say we have 2 million assets but 3 million liabilities. Bad financial position. What happens if we have 1 million assets and 0 liabilities? 1 million assets. Good position. Okay, so financial position determines, or not determines, looks at assets and liabilities and determines your financial position. Good or bad position. Owner's equity. Okay. Right, and then owner's equity is obviously looking at the owner. So that's owner's equity. Owner's equity comprises of a few things. Capital and drawings. Plus profit or minus the loss. Okay, that's what forms part of owner's equity. Okay, we'll look at owner's equity later on when we discuss the actual statements. Right now, as I said, don't worry about what the statements, in terms of what they look like. Just appreciate what the statements do. Okay, they show income and expenses, they show assets and liabilities. Makes sense? Okay. Right. Section B was the processing of accounting data. Okay, we're not obviously going to look at journals today in terms of completing a journal. Okay, I'm going to leave that for next time. Okay, but I want to cover the theory relating to it. Okay, so do you understand what a journal is? We'll show how to draw up a journal later on. Okay. Right, so the first bit is, we spoke about the steps earlier. Transactions will have source documents. What are source documents? It's proof or evidence that something has taken place. Okay, So if I buy something, what do I get? A till slip. That's the source document. If I'm buying something, is that a payment or a receipt? It's a payment. I'm buying something. Okay, so if I'm buying something, I've got a payment. So where would I record that? In a journal that represents all my payments. Okay, do I only buy for one item? Do I only buy one item? Do I only pay for one item? No, I could buy many items. Okay, do I only buy once a month? No, you could probably buy several times a month. Okay, so if I'm buying, let's say, inventory, if I'm buying stock, I'm not going to buy stock once and that's it. I'm going to buy stock as and when I need it. Are all those transactions similar? Yes. Okay, if I buy stock, I'm buying stock. It doesn't matter how many times I've bought stock, I'm still buying stock. So when are transactions recorded? Not at the end of the financial year. That means, so when I go to the store and I buy something, I'm going to wait till the end of the year to record it. No. When
the transaction takes place.
There's the answer. Perfect. Okay, when the transaction takes place. Right, so when transactions arise, they must be recorded. Okay, so if you go to the shop and you buy something, it gets recorded. If you buy inventory today, it gets recorded. If you contribute capital to the business, it gets recorded. If you take from the business in terms of drawings, it gets recorded. Okay, so the answer is transactions are recorded when they occur. And that's why we have accounting books, we have journals. So this is what a journal is. A journal is a classification box for transactions. What does that mean? Well, it means I'm grouping similar transactions in a particular journal. Because they're similar, they're affecting the same accounts. Okay, so if I'm looking at the cash receipts journal and the cash payments, what's the focus? Well, if I'm buying, or, well, let's say if I'm paying or receiving, what account am I always affecting? The bank. Okay, I didn't write that in. Let's put it in. Bank. Bank asset increase or decrease. Okay, that's the focus. Right, you do get different journals. You get purchases journals and you get purchase returns journals. If I'm looking at a purchases journal, who am I dealing with? Debtors or creditors? Debtors or creditors? Think about it. Who do you buy from? A debtor or a creditor? Correct. A creditor. There's the focus. Okay, so creditors will either go up, liability increase, or decrease. Okay, sales. Who do I sell to? Debtors. Good. So your sales will either go up or down. Debtors, asset, increase or decrease. Right, and then general journal is for other transactions. Things that aren't affecting bank, things that aren't affecting creditors, things that aren't affecting debtors. Okay. Right, so that's the purpose of a journal. Okay, I'll show you how to do a journal exercise later on. Okay, we'll show a journal. We'll capture transactions in a journal. Right now, I'm going to give you some homework to do. Okay, I want you to tell me what you think are going to be the debits and credits for each of these journals. Okay, something to consider.
I'm not sure I'm understanding the question.
Okay, so I'll do this one then, just so you're understanding what I'm saying. Okay, right, cash receipts journal. If I'm looking at transactions in the cash receipts journal, what is the business doing? Receiving cash or paying cash? Receiving cash. So when you receive cash, what do you do to bank? Increase the bank. So how do I increase the bank? debit the bank. There's the answer. Okay, I didn't write that. Let's write it in. Bank, asset, increase. Okay, the credit could be for anything else. It could be for income. It could be for capital. Okay, you're receiving something. Okay, etc. There are other instances where you've received something. But this is the NB. Okay, if I'm looking at the cash receipts journal, there's going to be a debit for the bank because the bank account is going up. Okay, because am I receiving cash or paying cash? I'm receiving cash. See, that's the answer. Does that make sense? Okay, so I want you to think about those other journals because we spoke about it here in terms of journals group transactions. So I want you to tell me what sort of transactions do you think we'll see in a journal? Okay, maybe just to wrap up this bit, in a cash payments journal, would I expect to see payments? Yes. So what accounts will I affect? Expenses could be part of the payments. Okay, so expenses would be recorded here. Expense, or I could buy an asset, or I could pay a liability. Okay, but if I'm paying, what account is always going to be affected? Bank. Asset, decrease. See, there's the NB. Okay, so for a cash payments journal, bank is always going to decrease. For a cash receipts journal, bank is always going to increase. It's always going to increase. It's always going to decrease. It's not going to change. Okay, because what am I doing? I'm capturing transactions in a specific journal. Okay, so journals capture transactions. Right, you just told me I could pay for an expense. You told me I could pay for an asset. Okay, so if I buy a laptop, it's an asset. It's going to be credit bank, debit the asset. If I buy stationery, it's going to be credit the bank, debit the stationery. If I pay a liability, okay, I pay off a loan, it's going to be credit the bank, debit the loan. Okay, it doesn't matter what I pay, but I'm paying something. Does that make sense? Okay, so that's what I want you to consider for all the others. Okay, so I've given you a bit of a guidance here in terms of CRJ and CPJ. Okay. All right, so please go over these. We'll discuss them next time. Okay? Yeah, just give me your thoughts. Okay, we'll cover it, we'll discuss it. Okay, then I've got some homework for you guys to do. It's from the study guide. Where's my study guide? Here's it. Okay. Right, actually, let me show it to you rather. It might be easier. Okay, I've got it open. Not that. Okay. All right, so I have your emails. I'm going to definitely assign access to those videos. Then you'll get a link. Okay, I'll email you all a separate email as well, just in case you don't get the direct links. And then you guys can go on and watch this. Okay, this is your... Oh, what happened? Oh, the cable came out. Okay. You can see how I answered the assignment. Okay, I did the assignment like I would do a past paper. Okay, and I talk to the question in terms of things that you need to be mindful of. Okay, obviously we still need to cover more before we can do some of the assignment questions. Okay, because we started a bit late in your semester. Okay, I only started in August to help you guys with the accounting. So we still need to cover more. Okay, but you guys have all the answers to all the questions. Okay, so you can submit the correct answers so you can at least tick that off your to-do list. Okay, after we've covered more, come back and review the assignment. Or what I would suggest you do is do the assignment before you check the answers. That might be better. Okay, then you can see, oh, okay, that's what I need to think about, and so on. Okay. The homework that I want you guys to try to do is from the first few activities. It's the accounting equation. Okay, so let me show you accounting equation here. There's accounting equation. It's the revision exercises. The revision exercises are much better. It's toward the end of the chapter. There we go. The exercise at the end of the chapter. There, exercises and solutions. This was from chapter 5, okay, which is what we discussed today. Okay, so when looking at exercise 5, you'll see at the end of the chapter, okay, this one you can do. Right, so exercise 4, again, don't look at answers, try and do it before and then check your answers. Would you be able to identify what these are? Okay, so do you know if it's an asset, liability, income, expense, capital, drawings? All right, so test yourself. The answers are there, you don't have to worry. Then you come back and check. Okay, this is something that you need to do, obviously. Exercise 5. All right, so today I showed you how to do a accounting equation question using the past paper. Right, I want you to look at this exercise and I want you to interpret each of these transactions, okay, to see if you would be able to draw up the accounting equation. See, there's the accounting equation. There's the solution to the answer. Okay. The only way you can check if you're doing it right or not is by approaching it the way we did it. Okay, so when we looked at it today, when I looked at the past paper, okay, this bit, I asked myself, what account stands out? I asked myself, what is it? If I know what it is, and then I ask myself, what's happening to the account? Okay, is the account increasing or is the account decreasing? Okay, if you can do that for all of these, I'll do one for you just to help a little bit, okay, with the exercises here. Goodman deposits opening capital. That stands out. That stands out. Capital is capital. I'm going to credit it because it's increasing. 50,000 is cash. Cash relates to the bank. Bank is an asset, increasing. Okay, where do assets increase? On the debit. So the solution should show you debit bank, credit capital. Do you guys agree? There's the solution. Debit bank, credit capital. See, they don't put the extra bit in. I would. Okay, capital is capital. Does make it easy, but they're obviously they're assuming you went through the examples and you've read their textbook and all of that. Okay, so you needed to do all of that in order to be able to do this activity, right? And you've got lots. This is not the only one, and that's practice. That's getting into the car and practice driving. Okay, because now you've seen how to do it. Now you need to practice doing it. Okay, we'll practice together when we do the past papers. Okay, I'm going to do those with you. Right now, I need you guys to cover these examples yourselves, and then if you have problems, you bring it to class, we discuss it, we see what's going wrong. Okay? Or just send me an email or WhatsApp me, either or, doesn't matter. Okay? But ask questions if you have problems. Right, here's another one. See, another one you guys could try do. Try do activity 6, do it, then mark it. Don't just look at answers. You're not going to achieve anything by doing that. It doesn't work. Okay, you need to actually do the questions. Right, here the format is different. It's tier accounts. Don't worry about that. It's still debits and credits. You still need debits and credits. Okay, so in this one, debit, credit, bank, asset increase, because this is a capital contribution from the owner. Right, so then if I look at their solution, there's capital, and where's the bank? There's the bank. Okay, so bank is being debited and capital is being credited. See, it's the same thing. It doesn't matter what format it's in. You've got to practice doing the basics.
So when crediting, it's basically, when it comes to the T format, it's direct reporting.
Contra accounts.
So it's direct reporting. So if, like you just said.
It's just a different way of showing the working. Okay, because here I showed the working. Here's my working.
Yeah.
Credit capital, debit bank. Okay, there's my working. Asset increase bank, debit.
Yeah.
Right? Okay, so now here, there's the one example. See, that's accounting equation, right? Yeah. And then this is ledger tier accounts. Okay, we spoke about tier accounts. Yeah, we even did the exercise. You did this. Yeah. Okay, so now if I'm doing that, there's the capital. What did we say we're going to do to capital? We're going to credit the capital with 10,000. See, that's what we did in your notes. And then what did we say we do to the bank? Debit the bank. Okay, the only thing different here is they just show you what it is. They use the contra account. And that's why I spoke about contra account in that one slide with the T accounts. Okay, you need to just reference it. Okay, you never ever write capital in capital. You can't write bank in bank. Okay, so capital is referencing the bank, but capital is going up by 10,000. Okay.
And then the wording is a bit confusing.
What wording?
Like drawings.
Drawings is drawings.
No, like, I mean, the way they would put it at times.
They talk about personal use. Okay, so let's see if there's a drawings one here. There's it. There's drawings. Okay, drew a check for private use. If I'm drawing a check, bank is going to go down. Drawings is going to go up. Right, so I'm going to debit the drawings and I'm going to credit the bank. Okay, so look, T account, bank, credit minus 2,000, drawings, debit minus 2,000, well, plus 2,000. Makes sense? Okay, obviously you need contra accounts. Okay, so if it's a contra account, I'm going to write drawings here. Okay, I'm going to write bank there. Do you agree? See, that's the only contra thing. That's why I'll show that to you later. Because I'm not so worried about that. I'm more worried about this. Can you do that, yes or no? If you can't do that, you're never going to be able to do that. Okay, that's why this is the key. Getting that is the key. See, credit bank, debit drawings. Now have a look at the answer. There's the drawings, debit the drawings. Just reference it as bank. And then where's the bank? There's the bank, there's the drawings. That's all. Okay, credit the bank, credit the bank. Right, so see, this is easy if you get the basics right. You need to now practice getting the basics right. That's why I'm asking you to go over some of these examples. Okay, go over as many of them as you can and try see if you'd be able to interpret the transactions correctly. Okay, we'll do more when we get to more past papers. Makes sense? Awesome.